Hello, everyone. I welcome you all to Luxa Trading Academy. In today's section, or in today's video, I want to show you guys or teach you guys how to master sniper entries on the financial market. All right, so please, if you are new here, please subscribe to the channel. I'll be bringing you guys new videos on how to trade, how to spot opportunities on gold, GBP USD, US30, and other instruments, all right, and even synthetic indices. So please help us by liking the video, leave your comments, and also subscribe. Yeah, so when it comes to mastering sniper entries, you first have to be very disciplined to your strategy and your rules that you trade with. So let's say there are some people who trade price action, some people trade ICT, SMC, whatever. So in today's section, we'll be doing more of price action, all right? So let's say we have our markets trending up like this, higher high, higher lows, higher high, higher lows, higher high, and then what's, let's leave it like this. Okay, now we know market is what's in an uptrend, all right? So we want to what, catch the trade in the what, exact swing point. We don't want to miss out, all right? So, and that's what sniper is all about. So for you not to miss the move, because you don't want to buy at the middle, because when it's the middle, it can retrace on you and perhaps take you out before it goes your direction. So what you have to do is you can use Fibonacci concept. You can also use break and retest to catch your continuation, right? Or your chart patterns, which I'll be doing more videos on those on Fibonacci, break and retest, and other strategies as well. But today, let's just master how to spot the sniper entry. So let me make this one here. Okay, so let's say price give us a low, and we mark the low, and then it gives us a high, which is at the top. All right. Okay. When price came to this low and went up and gave us a pullback, it couldn't take out the previous low. So that means what, price is going to continue trending up. But then we want to be very sure. So we wait for price to go up again, come back, and make sure it doesn't take out this recent, swing low. So if it doesn't do that, then price is what we expect price to go up. For price to go up, we need to buy at a level. When we look at this, there is no level right here that we can use it to buy. So what do? We wait for market to go up to break the previous high, pull back again. When it start pulling back, now we look for what? Various levels. So right here, we can have a level like this. And then when price comes into our zone and it starts rejecting, then we can what? Spot our entry. And for us to get a sniper, there are so many things we can look out for, which is what? Candlestick confirmation, right? So we have candlestick formation and candlestick confirmation. So when it comes to the candlestick formation, it's all about how the candles are forming, right? Sometimes they can give us, sorry, I think I have to pause it. Okay, so let's continue. So when price comes to the zone, we look for what? Candlestick formation and candlestick confirmation. So the formation is how the candlesticks are forming. So if it starts giving us something like this is something like this with a long wick. It's a long wick. Let me. Okay. With a long wick like this, that means what? Price is a market candlestick is what forming very well, and what we expect price to give us a continuation inside our PUI. And the confirmations are the candlesticks that will tell us that okay, now is the time for us to buy. So we have like the bullish engulfing, we have the tweezers, and then we have and again. So basically we can use a bullish engulfing, a hammer, and the tweezers. Yes, most of, especially these particular ones. Then we spot them right inside our POI, and then what? We take our buy from the zone and targets be the next high or any major level, and put our stop loss right below the range, and then what? We wait for market to do its own thing. We also have a scenario like this, where we can have price going up, coming down, going up, coming down, going up. Now, once price move about 25% of the range, which is from this low to this high, we pull our Fibonacci from the low to the high and expect price to tap this price to tap into this zone, 61.80 or 78.6. And then we will draw our PUI here. And then we look for our candlestick confirmations, and then we take our trade. So the candlestick confirmation, as I said earlier, we have the tweezers, we have the bullish engulfing, we have the hammer for the buy continuation. I will do a separate video for that. So that those of you who are not an advanced traders, we don't know how to spot them, I will do a video on that. So that is how you spot works, sniper entries. When trade comes to your PI, wait for confirmation, because there are instances where markets can just come back all the way to the downside, and we are going to take a huge loss. So when price comes to your PI, you don't just jump in. You wait for confirmation, and then you target markets, or you target the next high. So something like this. Then target this high, move your SL below the range after your confirmation, and then you target your high. You can also take your buy by having something like this. Let's say we have something like this. Goes up, come back to the zone, and price come back here to give you a double bottom, or you can also call it a demand level or support level. When it comes here, you just don't want to buy and expect it to go up. What you do is you wait for candlestick confirmations, which is your hammer, your engulfing candles, and then the tweezers. And then once we are able to find those candlesticks, Then you can take your entry right at this low here and target the high. You target the high. Then move your stop loss right below the range. And then what price will do whatever you want to do. And then at the end of the day, you are going to hit your take profit. So you can enter a trade and like you are not going to get crazy cool drawdowns before it goes your way or get taken out before it goes your way. So these are the simple ways. So master sniper entries or take sniper entries. So let's go to the chart and see if we can spot some opportunities on the market. Okay. So when we look at price came to this down here, went up, came down, went up, came down, went up, and started pulling down, pulling back. So what do? We use Fibonacci to see if it's going to align with what I just showed you. Okay. So we can see price coming toward the 61.8 and 78.6 region. So now we have to look at what our candlestick formation and the confirmation. The formation is how our candles are forming, and then the confirmation it is giving us. So when it comes to the confirmation, you could see that the formation, we saw this bearish candle and then followed by a doji, and then we give another doji again, and then give us a bullish engulfing. So what do? We buy from this zone, from here, put our stop loss right below the range, because obviously price came to our 61.8 and 78.6. So here becomes our PY. All right. So here becomes our PY. So we buy from this zone, and then where we got the confirmation, we target that level. And what do we see? Price gave us what? Tap into our take profits. And mind you, this work on all time frame. Now, if you're able to spot the market structure, you can spot all these opportunities. So you can see how it works. It went into profits and then later came back to retest the zone and then straight to TP and even went further to the next level, which was somewhere here. So let's look at another one. Okay. So price went up, came back again, went up, came back, did whatever I want to do, and then broke out to the downside. So when it started breaking down, we saw this level right here, which is a support zone. And then you notice price was unable to break it. When price came, it started giving us what candlestick formation. So we have to wait for our confirmation. The formation is we formed this bearish candle, but I could see buyers were pushing it up. Give us a doji. Price were markets buyers were trying to push it up. Give us another doji, and finally give us a bullish engulfing. So at the end of the day, we are going to put our buy to right here, and we enter and target the next side. Or you might as well target the major one and mark out these levels are as our take profit levels, right? Where we can take partials. Sorry. Even here can be take profit level. All right. So you could see over here, price just gave us yeah, price just gave us sniper. It just gave us a small drawdown and then it went straight into profit. So this is how you can spot opportunities on the markets by what I just showed you guys. I'll shoot more videos or I'll record more videos on how to master sniper entries. So I don't want to make the video too long. So I'll leave it. I'll end it here. Then please help me by subscribing so I can show you guys more strategies and ways of becoming a profitable trader. And one advice I'll give you guys is every strategy works. I can trade SMC, I can trade ICT concept, I can trade price action, and I will still make money. It's all about understanding market logic. Market logic is what trying to understand what is happening on the market or what is happening right in front of you. We are in an uptrend. Price is pulling up and down, pulling up and down, pulling up and down. So what does it tell you? Price is giving us what? A premium price, giving us a discount, giving us a premium. What we expect to give is going to give us a discount. When it gives us a discount, what do? We look for our confirmation. And then we buy at the discount price and target the premium price. And that's how we make money. So please help us by subscribing to the channel. I'll be giving you guys a lot of strategies on how to make money on the financial market so we can all become profitable traders. All right. So subscribe, like the video, share to your friends and family so they can also learn how to trade the financial market. Peace out.